Now we're going to look at the purchasing cycle, and we're going to start by visiting Paul in the client's purchasing department.
I've heard a lot about this hot project for the new t-shirt line. Looks like we have an approved requisition form. Time to make the purchase order. I'm glad I already called around to find out that Blank T-Shirts Unlimited Corp has the best price for this project.
At this point, Paul would complete the purchase order. Paul will make 5 copies of the purchase order you see here. Note that 1 will go to the vendor, 1 to the store, 1 to the receiving department, 1 to the files, and 1 to accounts payable. However, the copy going to the receiving department is going to be a little bit different. It's good practice to use what's called a blind copy. We send the receiving department a purchase order with a quantity absent so that when they receive the merchandise, they have to count it and verify how many were actually received. So good controls here. Sequentially numbered requisition form, requiring an approval of that requisition, the process of obtaining the bids for best price, also using a sequentially numbered purchase order, and the use of the blind copy for the receiving department. Sometime later, a shipment from Blank T-Shirts Unlimited arrives in the receiving department. Let's see what Tom, the receiving clerk, does.
1, 2, 3, 5,000 blank shirts, size medium. 1, 2, 3, 2,500 blank T-shirts, size large. 1, 2, 3, 2,500 blank T-shirts, size small.
With each count, Tom is filling in the receiving report. He'll then take that receiving report and make 4 copies. 1 will go to accounts payable, the original. 1 will go to the requisitioning department to acknowledge that, hey, we've got the stuff you ordered. 3rd will go to the files, and the 4th will go to the purchasing department. Additional good controls here. The inspection of goods prior to acceptance by the receiving department. All shipments must have a purchase order matching the details of the items received with the blind count on the purchase order. Preparation of a sequentially numbered receiving report, the requirement that the requisitioner must sign that that is in fact what they requested, and the distribution of the receiving report we just described. Okay, on to accounts payable. Jane, our AP lead, has received a number of documents, including an invoice from the vendor in today's mail.
Let me start filling out the voucher cover sheet. I have the requisition, purchase order, receiving report, and vendor invoice. Based on my review, $15,000 appears correct. The department requested 2,500 small blank T-shirts, 5,000 medium blank T-shirts, and 2,500 blank T-shirts. I can see this requisition was approved. We issued a purchase order for those items, and the amount of $15,000 on the purchase order matches the invoice amount. We received all of these goods on December 19, year 2. Each shirt cost $1.50, and we ordered 10,000, so that is $15,000. I'll go ahead and fill out this amount, date, to whom it is paid, sign my name, and attach these documents. In addition, I am going to update our accounting records to indicate the increase in inventory by debit inventory and credit accounts payable for $15,000.
At this point, Jane would forward the package on to the treasurer. Good controls here. Matching the invoice to requisition, purchase order, and receiving report, making sure that everything agree. Mathematical accuracy and approvals on the documents are verified. Using a pre-numbered voucher cover page. And segregation of duties between record keeping and custody. Holly Hansen is the treasurer for our client. She's received the voucher package from Jane.
This voucher package looks complete. I'll go ahead and write out this check. Then I'll stamp paid on the voucher package.
And the check's in the mail. The voucher package heads back to accounting. 2 good controls to note here: the independent check of the voucher package and the segregation of duties between custody held by the treasurer and record keeping held by accounts payable. And now we return to Jane in accounts payable.
Okay, looks like this was paid for the full amount of $15,000. I'm going to debit accounts payable, Blank T-Shirts Unlimited Corporation, and credit cash for $15,000.
And a final good control to note here is the elimination of the payable after evidence of payment and receipt. Now again, let's talk briefly about how else an auditor might deal with this information in performing audit testing. One of the big ones is testing for the completeness of liabilities, typically done through the search for unrecorded liabilities. They pull cash disbursements made after year end. So, If an auditor were to select, say, check 1936, which happens to be the check the treasurer just issued, he or she could then request the client to pull the voucher package. The auditor would then match those items, much like they were matched in the past. In this case, the expense relates to year 2, and it should be shown as a payable as of year end. The auditor could trace this amount to the AP listing, agree the total AP to the subledger, then to the general ledger, to the trial balance, and on to the financial statements as a substantive test. As we saw with the revenue cycle, you could also use this testing as a dual purpose test, looking at some of the controls we just mentioned.